Hi everyone. I'm Raj Shiva, a financial markets professional from the Voyagers cohort in New York City, in conversation with a best-selling author who is one of our very own, a LEAD alumnus and actually a current CF, Matthew Weber. Matthew is author of an international bestseller called Fit for Disruption. A plug for it, you can get it on Amazon. How to transform your business and thrive in times of rapid change. He has over 20 years of international experience. Matthew has worked across the globe with organizations undergoing immense change and comprehensive transformations. Same goes for me. I've lived and worked all over the globe in banking and been part of the financial crisis. Can't think of a bigger disruption other, in the financial world, but of course, we are going through bigger disruptions in the real world as we speak in Ukraine and Russia. Shout out to LEAD Ukraine. There's a website, you can donate on that. So Matthew and I are literally on opposite sides of the globe. He's in Melbourne, Australia. I'm in Manhattan, New York. Though I've virtually spent the last 2 hours doing Zoom calls with Sydney, Australia. So that's a real disruption. The way we do business has changed. So needless to say, I want to say that everything that I say here is on a personal level, for a disclaimer, because I'm going to talk about some of the financial stuff as well. Another point I want to make is LinkedIn would be a good way to catch up with Matthew and me, of course, anytime after this talk for any further questions. I'm also available on Workspace. So why did we want to do this talk, apart from spending time with all these amazing people? Well, really, it's about the premise of LEAD. The letter D in Stanford's LEAD stands for disruption. And therefore, it should be self-evident why I chose Matthew and his book. If you're a leader in today's changing world, or someone looking to disrupt your own career, this session will give you a broad framework to think about transformation in today's environment. The same framework can also be applied in a personal or a professional sense. So disruption in our context is really radical change to an existing industry or market, but Matthew will have a lot more to say on that. I am going to give you some examples in the financial context that will be relevant to regular people listening, so try to demystify that. And so over to you, Matthew. Welcome. Thank you for doing this. It's a little different from doing designing organizations as my CF, so my first question is straight off the bat. We're both cricket lovers, so the bat does play in. Why did you write this book, apart from wanting to do a talk with me?
Well, I think we'll touch on that first. Thank you for, I'm assuming you can hear me okay. But look, thank you for inviting me to do this talk with you, Raj. And obviously, thank you everyone for taking some time out to have a listen to what we have to say about disruption. But to answer your question, Raj, I guess, why did I write the book? I think there's a number of reasons why I wrote the book, and I think and you touched on like the global financial crisis, but we only have to look around us and just look at the level of disruption that is happening. And look at the last 2 years with the pandemic. You look at the current geopolitical situation emerging, in Europe with the war. But just in general business, there's lots of disruptions. There's disruptions to how we work, where we work, when we work. And one of the things that I noticed was a lot of leaders weren't very well prepared for this amount of disruption, even though that the disruption is part of everyday life now. And it's interesting because we talk about disruption as if it's a one-off event, but it's not a one-off event. It's something that we all, as leaders, need to be very, very prepared for and have a systematic way of managing and dealing on an ongoing basis. So disruptions aren't going away, no matter whether they're like the pandemic or whether they're a new competitor or a new disruptive business model that's entered in, or the way that people work. I also wanted to show, I think there's some misconceptions about innovation, that if you do innovate, it comes some way at the risk of either your existing business model or your financial stability. And I also wanted to demonstrate that it's not an either or, it is an and. So you can have financial stability and you can have innovation. You don't have to compromise one for the other. And I know that a lot of organizations are definitely in a cycle of short-term profit cycles, and it's about how do you help them understand that. So yeah, so that's and the last thing I want to say about that, I worked here in Australia actually for some organisations, and one of the things that I found, I worked for one organisation, a very large known retailer in this country, and they basically had a broken business model for about 10 years. And what happened was that the transformation that they went through basically followed principles very similar to Fit for Disruption. Now, it's the most profitable department store in the country as we speak. So it was a massive transformation and turnaround. I was part of the leadership team that executed on that. But what was interesting is that I actually went to a sister company, a sister retailer, to do exactly the same thing, but they didn't follow the same principles, and they went backwards. So they're probably going to have an unprofitable model for the next 10 years because they just didn't get the fundamentals.
Yeah, so I find it interesting that you analyzed it in terms of the business in Australia, but of course this applies everywhere in the world. And I really wanted to ask you about what are the attributes in your model. And I think at this point, I'm going to share a screen share so everyone can see your model. And I'd love to have you talk about it, why those attributes are so important to start with. So.
Yeah.
And just let me know if you can't see it, as you all probably figured out.
I can see it nice and nice and pink. Look, it's one of the things about the model is it should be very intuitive for most people, and it should be something that that should just resonate. And it was built for practitioners as opposed to being a theoretical model. This is very much as you go through the book, it is very practical in its in the way that it's written, and it's also written in with very simple language. But the first element is the first attribute is be commercial, and that's the first one, and it's the first for good reason. It serves as the foundation, and it probably very much links in with what I was saying before, that it's not an either or, it is an and. And if you are commercial and you have commercial discipline or financial discipline, it will help you elevate your innovation and your business models, for growth. And there's a few elements that sit under there. So there's like strategy, and there's governance, and there's around report. Yeah, there's another slide that actually shows, and I won't go through those in detail now. It's purely because we don't have enough time. But again, they're very intuitive, and they're things that need to be done. But if you stay on the orange one for a second, on the commercial model, it's just setting, all that is just setting the foundation. Now, the second part of the model is to affect, not to affect change, it's to create solutions. So now that we have a model where we've got the fundamentals right, we're commercially sound, and we can grow, it's like, I find it interesting, some companies go and try and innovate, or they try and change their business models, yet they've got a business model that they need to actually fix the basics on, and that's again leads back into the commercial. But once you have that sorted, you can move into the create mode. And why this one becomes so important is this is about really tapping into human potential, or you know, organizations need to tap into that potential because it's sitting everywhere. And whether it's a small organization or a large organization, I see a lot of businesses that don't link in with their people, and particularly the frontline staff or the people that are dealing directly with a customer. So accessing that human potential becomes critically important. The next, the third element is around the change, or how do you affect change? So it's fine now that you've got a commercial base by which to go from, but then you have, and then you've now created solutions that actually solve problems for customers. But how do you actually change your business to be able to affect that, to actually make it happen? Again, what we see with a lot of organizations is that they talk it and innovate. You know, it's almost like you tick a box, but it's not embedded in the culture of the organization. So I think I said this is very much around making sure that it's sustainable, making sure that it can be embedded in the way of working of the organisation that you're working for. So, yeah, three main parts to the model. There's a few subsets to it, but it's be commercial, it's create solutions, and it's affect change.
Yeah. So one of the things I want to say is that if we have a few minutes at the end, we're actually going to talk you through how you could apply it to your personal life as well. And I do want to give a shout out to Edreen Wykes, who put together Me to We storytelling session. Actually, I was one of the speakers where I actually spoke about my own life disruption. So in a sense, at that point, I didn't specifically call out the model, but if you see it, you'll actually see how I was commercial. Commercial in this sense means actually thought about how to go about getting things done, what it would cost, as well as creative ways of finding solutions. So it does translate in multiple ways. Now, coming down to finance, I want to get down to the point of how the financial world, it's, as everyone knows, it's a world which goes through constant change. Who remembers when putting through a stock trade cost almost $20 a transaction through your brokerage account? I don't know how many of you were actively trading at that time. I do remember because it hurt. And what I will say is that these kinds of things where you have a model where there's high costs and there's a high revenue made by certain organizations, leads and lack of innovation all around, is just situations which are ripe for disruption. And to that end, my first example has a Stanford connection, but obviously, and it's really about Robinhood. Robinhood was founded in 2013 by Vladimir Tenev and Baiju Bhatt. They met as roommates on campus at Stanford, and that is really why I picked that as my first example. They had backgrounds in developing high-frequency trading systems and all of that, but they were really thinking of, could they upend mega players in the stock brokerage industry? So everybody put them down. They said, what about the regulatory requirements? Would beginner investors really care? All of that. So they didn't see the naysayers, and that's really what your fit for disruption model is, that you think of a solution, but then you have to also actually affect change. So they went at it. They created this platform, which was really about what they did was they had zero commission, no minimum amount. This helped with user acquisition. Everybody wanted to use them. They monetized their business with the payment for order flow. So what is Robinhood? They're just a simple online platform for trading. Those who've taken Hein Mendelssohn's class, or even if you haven't, you will at some point in time. You're going to learn a lot about platform economy and all that. And Robinhood was precisely that. They were an online platform for trading. But why were they successful? Because they democratized trading for people like you, me, and maybe some other people who might never have been drawn into this world of stock investing. And how did they do it? They gamified it. The user interface is very easy. They gamified it. There's easy to share stock ideas on their feeds. And there's a lot of interesting, exciting ways of drawing the user in. They had an education component. They actually educated financially, I wouldn't say illiterate people, but people who might not have felt comfortable venturing into this world. So they brought an entirely new market and all of that. So they created a solution, and they actually affected change by pushing that through, as well as in the process, why did the other players not disrupt? And, I'm talking, I don't want to take names, but the established brokerage houses. It was really because they had got used to doing what they were doing. They were making a good spread. There was no reason to innovate till it was too late. So it's innovation, disruption literally has that effect. It creeps up on you, and then it hits you. And then by then you've lost that first mover advantage. So that's my first example. I could talk a lot about this, but Matthew, the moment I said payment for order flow, he froze. It's like, don't make it too complicated. So there, I'm stopping there. Over to my next example, which is actually about ETFs. Why am I choosing ETFs? That's like old, gone, done and dusted. Why, it's like, it's there, but it's not something new and fancy. Why is she talking about ETFs? Because I want to set a framework for what disruption can also look like. The first mutual fund was created in 1924. Mutual fund is nothing fancy. It's a way of allocating your resources across different industries. It's a portfolio basket concept rather than going and buying individual stocks of different kinds of industries. And these stocks could be expensive. You might not have that much money. So it's just an easy proportional way of allocating across industries. So it diversifies your risk. Mutual funds got greedy. I wouldn't say they got greedy. They were at a certain price point, and they continued at that price point. They didn't think of lowering it, or they didn't think they had competition was going to be a big issue. And again, bear in mind, these are all industries which are highly regulated. So there were barriers to entry. One of the things people found were that mutual fund managers were rarely beating the index. And, so people said, why am I paying all these fees when at the end of the day, I'm still somewhat at the index? I'm not really making a higher return. So there is this idea that came up, which was easier, called the exchange traded fund. It's just a basket of securities that tracks an underlying index. And ETFs can contain all your investments like stocks and bonds. Why is it better? It's not necessarily better or worse, but people found it was more tax efficient. It was more liquid, and you could buy and sell it like a stock. Mutual fund, you can't do that so easily. At the end of the day, you can sell it at something called a net asset value. So it's not very, I can see people's eyes glazing the moment I say that. So that's not really the best way to create products. And really that's, I think, part of the whole disruption process. Is your product easy to use? Does it have that user interface? My last example is really, how could I not say it? It has to be in the world of NFTs, crypto, all of that. So I'm really going to talk about a simple product, which is really in the world of the non-fungible tokens. Why am I choosing this? Well, yesterday, as you probably heard, there was an executive order that President Biden came out with. They're actually going to start looking, the US is going to start looking at a framework for the whole crypto world. Without completely simplifying it, what I will say is this is very big, because now I'm not saying it's legitimizing it. What it does do is it's saying that all the self-regulating organizations in the US and the SEC and these kind of organizations are going to look at coordinating a framework. So it is a sort of legitimacy that's been granted. And I believe a lot of it has to do with the other global disruption you're seeing in politics. I don't want to expressly say that, but as you know, it's been difficult moving money around. And so there is this whole view that, maybe we should start looking at all of this stuff and see whether it could be made easier. So sometimes it takes a geopolitical disruption to cause a financial, the crypto world is already there, but it's a disruption in the way the regulators are thinking now. So, the fact that they're even open, this is huge. So I just want to call that out. I just want to talk about the NFT. NFT is just a simple digital asset that represents real world objects. Why is it a big deal? Because it means that all those things like maybe art or music, things which are non-tradable, like I bought it, I just kept it. But there was it couldn't be traded. So now you've created a wrapper and you can actually create a market. And there's this company called Nested. That's what they're saying is if you're a portfolio manager and you've created an asset allocation portfolio, I can even create an NFT on that portfolio. I know some of this sounds really crazy. It sounds really exotic, but it just means that things which were non-tradable, Professor DiMarzo talked about intangible assets. In a sense, this world is monetizing those intangible assets. So how does all this link down? How does it connect to this world of fit for disruption? And I think at this point, Matthew, I'm going to ask you this. What elements of the fit for disruption model would support these financial industry disruptions?
Yeah, it's fascinating the amount of change. And I think you've only touched on three examples, in a massive industry, and there's quite a lot. I think the first, if I go back through each of the attributes, I think the first of be commercial. I think a lot of those large institutions, or the ones that have been around a while and a little bit stuck in their ways, they're not leveraging their financial position to actually help themselves. It's actually getting in the road of them. So it's actually putting the blocks up. So if for example, I talk about governance as an example in the model. Now, governance is there in the sense of it's like a Formula One car, right? They can go really, really fast, but they have to have controls in place to be able to do that. And so, the ability to brake, or the ability, the whatever systems they have to help control the speed. Now, I raise that because every organisation needs to have control. I mean, you can't just keep throwing the baby out with the bathwater. But equally, in that sense, the organisations are it's debilitating them as opposed to helping them. And what they should be doing is potentially leveraging that capability and all that resource that they have, all that commercial resource, to be able to innovate. I think the second is around creating solutions, and I think this is a really, so as you went through, and I was really thinking about it as you were talking those through, and what had happened for each of those disruptions. What had happened is someone or a group of people actually solved a problem, but they solved a problem in the eyes of a customer or the user, and I think the fact that most of that is being done outside of the organisation suggests that some of these institutions don't have the culture, or it's not embodied in their organisation to create or to respond to some of these disruptive solutions. So they need to have that capability, and we have to remember some of these organisations have the resource, they have the people, and I'm sure with all the people that are in these organisations, they have the capacity to be able to do it.
Yeah.
So and then the third element is obviously around the change, and the organisations that the examples that you gave where the new business models and the new disruptive models came through in the financial industry, they were led, and somebody had enough passion, somebody had enough vision, somebody had enough courage to be able to put that forward and put the right team around them to make that happen, and really energized people to do something that becomes truly remarkable. So yes, so I think that's probably how I'd link.
I'm going to add one point here, Matthew, which is, what you said is all making sense. But, I do believe banks do have a role to play. It's just that in the past, what happened was they were unable to justify their business case to innovate. And that comes down to your commercial model. It wasn't really clear. And because banks work on specific accounting and they're not really startups, those things do bog them down, and they believe regulation doesn't allow them to actualize that innovation goal. They also believe legacy, and believe most banks have a lot of legacy infrastructure, which maybe some of the startups won't have. So they believe that legacy infrastructure overcomplicates that process. And so they're completely overloaded when it comes to reaching competitive parity, which is really what your model is talking about. It says you have to look at each of these things, but then finally you have to affect change. And I think that's what I really like about the way you've presented the model, that it's really, it's the key word is action, it's change. You're ending with that. Matthew, do you want to take a minute and talk about how to apply this model to your personal life? I'm going to share my screen, so hopefully it's the right screen.
Yeah, maybe if you go up to the first slide. I think that the principles remain very much the same. So whilst being commercial in a personal sense sounds a bit weird, but I think what we'll say from that in a personal sense is just have a foundation, have a strategy, know where it is that you're going and what you want to achieve and how you're going to achieve it. In terms of create solutions, then open your mind and I mean, look, by default, the fact that everyone's here says that you want to learn and you want to be educated. So that you do want to open your mind, and I think if you continue to hone in on that and continue to have an awareness of what's happening around in the world and what the opportunities are, and the ability to start connecting dots, looking back, I guess, is the Steve Jobs famous quote says you can't look at it going forward, but you can looking back, and just being bold and having the courage to have that level of creativity. And then, of course, we are leaders and we need to lead the change. And whatever that change looks like, we need to look after our people. We need to look after ourselves. But you have to make sure that, if you think of the elements of that sits under affect change, it's making sure that you're that you do have your vision. It's making sure that you do empower people around you. It is making sure that you're communicating effectively. And one of the most important ones is making sure you put yourself around a very, very good team. So, good mentors, good peers, good, just very good environments, and that will help you affect the change that you want to see in the world.
So for everyone who might have joined in late, I'm talking to Matthew Weber, author of best-selling book Fit for Disruption, also current CF. So those of you who get him, you can discuss the book with him. I do want to say one thing. LEAD has, and this is a plug for LEADer, LEAD Incubator and Startup Accelerator. One way to disrupt your personal life might be to take that chance, apply to LEADer Cohort 4. Applications are out now, and go onto Workspace and type LEADer, and you'll get the LEADer work group, and take the chance. Even if you don't have a specific idea, that's really what LEAD is about, to take a chance, disrupt your normal routine. LEADer is something that gives you the scaffolding to go from ideation to MVP. And who knows, like Matthew, you might find yourself writing a book as well and be a lead author, and I might get to interview you. So with that, I believe we are top of the 6:30 US Eastern, so my time is up. So as I said, everybody connect with Matthew on LinkedIn. That's, I believe, the best way to contact him. His book is on the chat, and thank you, Hannah, for doing this. And it's always fun to be part of Leaders. part of Me2B. Thanks to all the organizers. Thanks, Matthew, for doing this. So
Thank you, everyone.
So from
And thank you,
Melbourne to New York.